Hey, it's Ron Yarbrough. Thought I'd go over briefly our construction loan program. It works very well with modular home construction. We treat the retailer as a builder under this program, and you can benefit with relatively little to no money out of pocket if you already own the land. So, wanted to go through it briefly and then let you know towards the end how you can get in contact, how you can get this program started. There's a lot of details involved in building a house, even with the modular. Modular does help with a lot of the details, but I wanted to get through a few points just to help highlight a few things to help people understand. So our construction only loan is a 1 year balloon loan that is interest only. It is fixed at the time right before closing. It's fixed for the entire 12-month period of time. That rate is based upon prime rate. So it doesn't fluctuate throughout the construction process. It doesn't go up, doesn't go down during that 12-month period of time. Your file is manually underwritten, which basically means we take your credit file information, including your income, your reserves, your credit, assets, everything, and we will manually approve that. It's not through any type of underwriting engine such as Fannie Mae's desktop underwriter or Freddie Mac's loan prospector. Anyway, as long as you fit the criteria, we will be able to get that construction term loan done. It's going to be based upon a prime rate at a 30-year amortized loan payment, although you only make payments based upon the outstanding principal balance each month for the interest only payment, but we do qualify you on a 30-year amortization. If you currently own a home and you plan on selling that home or leasing that home out in the future, the nice benefit with PrimeLending is we are able to take your current home, do a rental analysis on your home to offset any payment to help with any debt to income issues you may have on the construction loan. So the one-time close program, which is a little bit more complex in the beginning because we have to get all the information on the construction loan, your in-loan approval, as well as your construction loan approval done so that we can close one single time. And then at the end of the construction period, roll it into the loan program that you were wanting, such as possibly USDA, conventional. It could be a number of different in-loan products, but we have to do all of that up front, and then you close one time, and the loan is modified once the house is completed for the duration of your term on the fixed rate. That program is a little bit more complex and is going to require a little bit more information from the builder to get the builder approved for that loan, as well as the consumers to qualify for that loan. Because once it's closed, anything that could change in that credit file could jeopardize the in-loan approval under a normal two-time close program. So the two-time close is the program I would like to emphasize the most. You can use it to purchase a lot and then provide the interim financing for the construction of the property. If you already own the land, then you're able to use the equity of your land plus the finished home's value, market value at the completion of the construction as collateral for the loan. If you were to purchase the lot and do the construction loan at the same time, you would have to have an injection of at least 20% down in capital. If you already own the land, that would be subject to whatever the finished value is to maintain a 80% loan to value at the end of the loan. On modular home financing, it's treated just as site-built homes. So you get a huge benefit on new construction modular financing because we compare that to other site-built homes with similar square footage, room counts, and everything else for the actual value of the finished project. You can refinance into a permanent loan upon the completion of the construction. You've got a 12-month time frame to meet that criteria, but typically on a modular home construction period, you can get that done in as little as 6 months or less. It potentially has a little bit lower interest rates than a lot of other mortgages on the end when you do a two-time close versus a one-time close, especially in a market where interest rates are declining, which hopefully in the future that is the case because rates have leveled off and are starting to improve a little bit as of September 15th, anyway, 2024. The construction, PrimeLending Construction program are basically for conforming loan amounts, one unit primary residence only. The maximum loan to value would be based upon the appraisal or hard money cost on a purchase. The maximum debt to income for a conforming construction loan is 43%. That means 43% of your proposed fully amortized mortgage payment along with all the other debts that you are obligated to pay. The pricing and fees for the construction loan, there is an additional fee outside of a normal regular purchase or refinance loan. And that's basically to manage the draw process and inspections to make sure that the money that's being paid out is for actual costs that have been completed. For conforming loans on modular construction, that management fee is $2,200. For on-site building is $2,500. But once again, the benefit for modular is huge, especially in these days with the high cost of construction. Note that in each case, the borrower will get a $1,000 credit towards closing cost if you allow me, the loan officer, to refinance you into a permanent loan at the end of the construction period, so that you don't have to pay multiple closing costs. It helps you offset a little bit of those closing costs at the end. The benefits to the borrower is we have an expanded product selection, especially on the in-loan. We've got 400 plus loan products that we can look at for your in-loan approval. We have improved pricing and cost. We only do fixed rates during the construction, so your construction loan does not vary in rate during the construction process. We don't charge any mortgage insurance during the construction process. We have easier qualifying than a lot of other in-house construction lenders are charging these days. And we have the reduced fees with the permanent loan at the end. We do build in a 5% contingency just in case there are some changes through the process, such as you don't like the way that counter looked and you wanted to upgrade to a better countertop, whatever it may be. There is a 5% contingency fund that you can tap into through the process with a change order to make any changes to the original plans. We have rate and pricing options on the construction loans. So if you do want a lower rate than prime rate, you can pay an origination or discount fee to get a little bit lower rate during the construction period. We can use, which is a really huge benefit that we have that most other lenders don't, and that's we can use a rent analysis on your current primary residence in the aid of qualifications to allow for the two-time close. In other words, if you have a current mortgage payment that puts you over the top on the debt to income, we can do an analysis of rent on your current residence just to not have to count that debt against you in the qualifying of your construction loan. And when you get closer to time to completion, you can either sell your house or rent it out at that time. So you may not need to sell your house prior to the construction of the new home, which is a huge benefit. Benefits to the builder, which is the primary reason I'm sending this out, is to give modular home dealerships a little bit more information and better choices for the consumers. We have a one-time easy registration process for the builders. We do allow up to a 10% startup draw at the time of closing, which would avoid a consumer having to pay a deposit directly on a modular home order. And we will do funding ahead of the beginning of the project through a 90% completion, which means we will disperse money throughout the process up to 90% of the total project cost prior to the completion. The modular home will be funded 3 days prior to its delivery, which is a common question I get from modular home retailers. The fact is we do allow for what we call curbside funding. So you're able to pay for that home at the delivery before it's actually placed on the land that we are financing. Payments are wired directly into the builder's account. We get your ACH wiring information, and as soon as we have cleared any kind of disbursements, it's wired directly into the builder's account. The draws are not dependent upon the borrower's performance of this as far as the builder goes. So the draws are only based upon that percentage of completion throughout the project of construction. A listing of all the registered builders is available. We don't have a tremendous long list in our areas here, but I can forward you a list of registered builders if you need one. And if a builder would like to get registered, it's not that hard of a thing to do to get a builder registered. So some disbursement examples would be basically you discuss the contract with your builder, and you sign the contract. You may put down a deposit on your contract. We actually get the loan underwritten, closed, the project appraised and everything else. The loan closes and we give out an advance of 10% at closing to the builder on record. We can set up additional draws throughout the process depending on how you want those funds dispersed. If it's a modular, then your draw schedule is significantly less than a site-built schedule. The example you're looking at here would be more of a site-built draw schedule. But on a modular, you basically draw for site improvements as they're completed, and then you would take a big draw at the time the house is delivered, and then the rest of the remaining funds would be dispersed as soon as you have a final inspection and the house is completed. So at the completion of construction, on the two-time close, a customer refinances into any end loan to which they qualify. So it could be a USDA loan, a government loan, a VA loan. It could be a conventional loan. It could be a conventional ARM, whatever type of loan that best suits your needs at the end of the construction. We can refinance it into there. If the loan is done and then the house is completed within 6 months, we don't typically require another appraisal for the completion and refinance. We can just do a recertification of value. If the construction period has taken longer than 6 months, then we do ask to do a new appraisal so that we can validate the market value of the property for that end loan. We can do, standard locks or long-term locks if the market starts heading towards a lot higher rates again in the future. We can take a look at possibly locking in your end loan on a long-term basis. In the next couple of years, I don't foresee that being an issue, as rates will trend a little bit to the better. We don't know how fast they're going to get better, but they are going to stay lower for longer and not go up as high as they were before. We do issue, if you allow us to do the in loan, you can do the loan with any lender that you choose. But if you allow us to do it, we will give you $1,000 lender credit that's applied to your closing cost on the permanent financing loan. So the customer at the time of the in loan does have an opportunity to pay down additional principal if they wish. If they want to end up with a lower loan amount at the end, you have that option as well. So how can you get a hold of me? You can get a hold of me at this number, the 573-525-4015. You can go to my website, which I should have put on this, but it's ronyarbrough.com. So it's spelled with RONYARBROUGH.com. And you can fill out a pre-qualification request. If you need some help on figuring out how to do that on a construction loan pre-approval, feel free to reach out to me and I can help you walk through that process. We're a very digital company and we love to help the process as easy as possible. Construction loan is a little bit more of a manual process, but we can use a lot of the technology that we have in place to help us through that process a little bit easier as well. So I wanted to share this with everybody so that they kind of understood for themselves of how this works. And please just feel free to reach out to me through my website, ronyarbrough.com, or just give me a call directly and I'd be more than happy to share any information I can. Thanks.